Hello, folks. This is Mitt here. I have Eddie with me here today. What we're going to go over is ARK, and we're going to dive into ARK deep enough to understand what strategies we can place and what our assumptions are as we try to dive into ARK. So let's get started. Hey, Eddie, can you hear me?
Yes, I can, Mitt.
Okay, good, good, good. So let's start off, Eddie. What are your thoughts on ARC? What's cool about ARC? Let's start with that.
Okay, so if you look at the 5-year chart of ARK,
Mm-hmm.
there's a little bit of dip, but it continues to go up. And I feel real bullish on all the 6 ETFs within ARK.
Okay.
Um, so my strategy is because I don't have that much time during the day to have a huge portfolio with a lot of different stocks. I want to narrow it down to maybe 5
Okay.
um, trades. And my plan is maybe something like ARC or um,
Okay.
something that's somewhat stable. And I have about 800,000 that I want to buy the stocks, diversify in these 5 different picks, and then start just stick to cover calls,
Oh, okay. Fair enough, right? Yeah, this is a
selling cover
ARC
calls.
chart, and as you can see, look at that. It's like right after April, it just took off, and it's just made a few consolidations,
Yeah.
but it just kind of hitting the roof on that. And your gut says that this thing can just only go higher at this point, right? Let's first take a deep dive into ARK, okay? What companies are in ARK, right? So let's look that up real quick. Okay,
Okay.
so the ETF holdings here in ARK, okay, which is this is their website. Can you see my screen? Is it up?
Yes, yes, it's up.
Okay. So I guess right here, the top 10 holdings, right? Obviously 10% Tesla, 7% Invite, Roku, CRISPR Therapeutics, Square, Teladoc, Protolab, Slack, Zillow, Pure Storage is here. Interesting.
Mm.
PSTG. Let's just see the view all holdings, right?
Yeah.
So, man, interesting. They got Twilio's here. Interesting. So, like, it's a mixed bag of a bunch of companies, right? Uh,
Yes.
Pretty much.
Yeah.
And it looks like the top, I would say the top, few are well-known companies we already know of right
Hmm.
here up until Pure Storage. Lending Tree, Therapeutics, Materialize, Pager Beauty. Okay. No, this is pretty interesting portfolio. So the whole idea here is if you got into ARC, you don't have to buy all these companies individually, right? It's
Cor-
kind of like all encompassed in this one holding company, right?
yes.
Yeah. Yeah. So fair enough. Okay. So at least this is the holdings. We're bullish on it. So that being said, let's go into trading strategy. So I'm gonna go ahead and quickly pull up my trading program here so we can see what to do in ARK. ARKK. So, so do you have a long call already on it, or what's the story?
I
Uh,
do not.
you don't know. Okay. So you were consider going long term, right, on it. So if you're going to go long term, maybe 2023 or 2022, right, contracts. So we can think about that. The extrinsic value is pretty heavy. Let's see if I can get something that has high delta. That's high delta right there. But something in the 80s would be preferable. Okay. But then we want Low extrinsic value. There's a lot of extrinsic value. Okay, this one's the lowest one. Let me see if I can go 2023. See anything here? Okay, they don't have options contract that go down so cheap below 45. So that is, yeah, so your only bet right now, if you wanted to do a long-term contract on a call, would be to go to the contracts that are in January 1st, 2022. Okay. And it would probably be in your best interest to go to 80 delta in the money contract. So an LT 80 delta in the money contract will be approximately 79. So that's about 100. Yeah. Or like I'll be frank with you, Eddie, on this one. Like if I'm adding this up, right, uh, it looks like even if I were to go for a further out delta, it's it's quite a bit of extrinsic value you're paying, which is fine, but I just don't want to pay too much for it. So I would go ahead and yeah, in this case, I would go ahead and do a I would do an 80. I would do an 85 call. This one right here. Let me just look at the theta really quick as well. Theta, yeah, 1.7-ish. That's fine. Yeah, this won't decay really fast. IV's pretty low right now, so it's a good time to get in. Okay, fair enough. So this is what if I'm in your shoes and you want to get long, you wanted to go long on ARK, I would buy a deep in the money call at 85. Can you see my screen, Eddie? Is it?
Yes, I can. Yeah, I'm following you.
Yeah, I would do this one right here,
Uh-huh.
and then you're talking about covered calls, right? Right on top of this.
Yeah, yeah, cover calls,
This
selling cover calls.
here, pretend this contract. Just pretend this is your stock, pretty much.
Okay,
Okay, this is your stock, right?
yeah.
So now it's 427 days out, right? So now it's a game of where do we do our covered calls in the short term, right? So
Mhm.
I guess the first contract, I like to do when I'm doing covered calls, I like to do things less than 50 days because that's where I can juice out the most premium. So the next
Okay.
one, less than 50 days out, is 28 days. Okay.
Mhm.
And I would, in this situation, I would go ahead and sell a call. Let me look at the delta. So yeah, the 16 delta is really, um, let's see, I would go to 22. Okay, fair enough. 113. That's the expected move. So I would sell a call at 113. So
Okay.
what do you feel about that? You think it will run up to 113 by December really fast?
Well,
It's 105.30 today, right?
yeah, that's the problem. I mean, it's contingent on so many things, politics,
Yeah.
and if stimulus is just approved, there's good possibility that it may go up, yeah, to 113.
Okay.
Um, but the what you're recommending is buying calls. Uh,
No,
but
like
what I
if
was
you're doing
thinking
a
about
long-term
is,
trade, right? This is a better than a stock trade. Then it's going to serve you better than a stock,
You
right?
can capitalize every month if you want on that, right?
Yeah, yeah. So the whole idea is the deep in the money call is
Mm-hmm.
behaving like a stock, close enough to a stock where you'll make 80 cents on a dollar if it goes up, and you will not lose much down, right? It'll go 80 cents and then 70 cents on the dollar, 60 cents on the dollar. So if you're going to buy 100 shares of ARK today, you're better off buying a 85 call expiring 427 days out than stock. If you're willing to buy 100 shares today.
My concern is when I sell covered calls and it reaches the strike price, and if it gets assigned to me, I don't have the to sell to that person. That's my concern.
No, and that's fine. You'll be assigned a short position in your account, and you can close your buy to cover your short position.
Oh, okay.
Yeah,
Okay.
yeah. They'll put negative shares, but you instantaneously have to go ahead and close that position out. And actually, that's a good thing, because if you get assigned, that means they've juiced out all the extrinsic value out of it,
Okay.
and that is very least likely to happen until the last week of the expiry date.
A broker would do that automatically then? They would sell my call options and then to cover the sell
No,
cover
no,
calls?
they won't automatically do it. What you'll have to do is, on the expiry date, if you're in the money,
Mm-hmm.
on the week of the expiry date, which is the week of December 18th, you'll go in and close this contract out if it's in the money, because you don't
Okay.
want to get assigned on it.
Right, right.
And if it's out of the money, you can just let it expire worthless, right? You don't have to do anything there.
Okay.
So you keep whatever you collected basically when you
Yeah,
sold.
yeah. You collect your $110 and walk away out of it.
And you can do that every month on the same contract, every month or every few weeks, depending. That's what I'm doing on a TAN, one of the ETFs.
Yeah.
I just did that today. I was going to talk to you about that one.
Yeah. So yeah, and similar strategy there, pretty much.
Mm-hmm.
Yeah. So the whole idea is at least you're collecting $100 every month.
Mm-hmm.
As you're approaching that price. The whole idea is you want to make your call contract as cheap as possible. You're lowering your cost basis there, Eddie.
Okay.
Okay, so this is a bullish way of playing it if you want to be bullish, right?
Yeah.
If you wanted my opinion on how I would play it,
Mm-hmm.
let's see today. It's 105, right? Let me just look at the prints. We don't have any prints in ARK today. Yep. So not much going on there. So like I would ideally go into December and just share the see. I would go ahead and sell the 98 and sell the 113. But before I do that, we have the honor to have Leon Gaban here, who will go over the Leon will go over the chart and give us a little bit of insight on the ARK chart. So I'm going to let you present, Leon. Just go ahead and present the chart so we can place a trade on ARK. We're trying to find a good optimal trade with a strategy in. So I I gave Eddie a suggestion on a long-term play, but I'm going to let you share your trading view screen so that you can just hop in and do some technicals for us.
Yeah. Let me share my screen.
Yeah, fair enough.
Here we go. So I'm at the moment, okay, so I have the Neo chart on here. Let me change this to ARK. So ARK is a fund that holds Tesla. Ooh, nice little run up here, 10-minute let's go to the first. We want to go out, zoom out to the week. Oh my,
Hmm.
that is amazing.
So by the way, Leon, I went over all the companies that are in ARK in this video. So we went over all the companies that are there, and
Okay.
I liked Eddie's idea of like just owning ARK rather than owning a bunch of companies. You have to
Mhm.
manage less in your portfolio. So
Yeah.
you're
Okay.
getting diversity that way, right? So
Yeah. Do you see my screen? Do you see art?
yeah, it just came through. Yes, yeah. Go
Okay.
ahead.
Okay. So let's. So yeah, this is a very bullish chart. You got it picking up volume. This is the weekly, right?
Yeah.
So just we zoom out to the longer time frame, just to kind of get what the market structure looks like. And then let's go to the daily now. So again, over here was the COVID drop,
Mm-hmm.
and then it just has been going up nonstop. So let's try
Like
find.
a check mark, pretty much.
Yeah, let's see a trend line, a rough trend line here. Now we're getting a little bit more volatility here, as this is a little bit more smoother, so more indecision and sell-offs here. We're seeing sort of like a triple top kind of scenario possibly playing out
Yeah.
here.
Mm.
So that's normally bearish, but with this momentum, let's look at 4 hours. Yeah, so looks there's a tiny reversal in the 4 hour. Let's go to the 1 hour now. So what's your position on this? Are you bullish or bearish, or what kind of trade was
So
he
Eddie,
trying to?
Eddie is bullish long term on it. So I've already given him a long term strategy that he would go in. That would be better than buying just 100 shares of the stock, right, up front. So I've already gone
Yep.
over that strategy. We're trying to do like a short term play. Like we're just trying to understand the support and resistance, so
Yeah.
that we can go ahead and potentially go in for a short term play by December, end of December.
Okay, sounds good. So yeah, we have this range right now, which is
Yeah.
between, yeah, I'll go to this wick and the closing
Yeah.
price. 105, and then this point right here looks like a lot of action at 89. The last low was 91.
Yeah.
So here, let me take out that last low. So this is on the 1 hour chart. Let me take out the MACD and zoom in a little bit.
Yep.
So the long-term trend line, I'm going to use Fibonacci extension to check any retrace levels. So I'm going to go from here to bottom to the top of this. So the golden ratio is between 97 and 96.
Okay.
For potentially, but you've got levels here too. You got the 3.6 at 102, the 3.8 at 100, 50% retracement at 98. So yeah, I'm seeing it's having a hard time breaking this 105 level, which it did back in October 14th, but then got rejected. So it seems like this range, 105 to 91, is a solid range.
So 105 to 91, it's not paying us enough, but let's see, 105 to 91. So do you think this thing could break out further to like maybe 115-ish?
Let's see here. Let me try the other extension. Oh, before I do that, let me remove this. So this is the other way. If it was a breakdown, 1/6 here, but let's go the other way. So oops. Looks like that. Okay, so possible targets. The golden ratio here points at 106. Based on this term and then this short-term midpoint.
Yep.
A one-to-one move would be 112. So it looks like it would take a stretch to get to 115.
It would be a stretch to get to 115.
Yeah.
Right. That's,
yeah.
I think that's a fair statement to say.
Yeah. Let me see if I can do it from here. Okay, if I try that, this puts the golden ratio at 118. So this is the Fibonacci extension tool. So based on this move and then this retracement, it just tells you where the golden ratio would be for a possible major breakout. So 118 here, and 100% move would be 107. Let me go to the 4 hour. Yeah, it'll be the same thing on the 4 hour. And then let's go to daily. Okay, so daily, let's try this one. Go to here. And then this point right here. Oh, sorry, the golden ratio, sorry, there's the green thing. So that's 105, that's under. And then on here, it'll be 114.
So 115 is definitely a stretch, I think, right?
Yeah, yeah.
And then on the bottom side, 91, fair enough, 91?
Yep.
90,
Bottom range is 91 at the moment for the short term kind of.
Okay,
thing.
so that's pretty much through.
And based on this wick right here, the bulls definitely bought it up here. It's a lot of interactions. In fact, here I'll put the volume profile on, a visible range volume profile. So yeah, a lot of action buying and selling at 99. And then the next biggest
end up channeling there pretty much, right? For the longest time, pretty much.
Yeah. There's a lot of interactions basically. That's a lot of volume at 99. And then you got this big support here from 93 to 91. So if this broke, actually, there's a pretty strong support here too, 97. So basically 99 and 97. There's a lot of activity here.
That's where you loaded your $1 million, right, Leon?
In ARK, no. I still remember the ARK 619 $60 call when ARK was like 40 or 50 bucks.
Yeah,
got out of that one too early.
Nice.
Yeah.
So let me take it back to the strategy screen here real quick.
Okay.
So here's what I'm thinking then. It probably feels fair to do a 91 and 115 straddle. And then if it happens to reach 115, we'll roll it out kind of thing. So we'll at least do a roll strategy on it. On this one, it's not quite a bit of a return, but it's fair. So I'm collecting 125 on $3,155 investment. So if I were to place this trade, let me see if it's going to give me a fill here.
You got filled.
Yeah, there we go. So Eddie, $125 on $3,000 investment. Let's do the math here real quick. 125 divided by 3,125, whatever that was. That's about 4% return in 28 days. So times 100, 4% return divided by 28 days times, let's go ahead and multiply it by 365. Annualized return of 52%. So I think it's a fair trade, and by the time this expires, and we may be able to get out sooner, Eddie, on this one. We may not have to wait the entire 28 days. And if this doesn't hold true, then we're going to roll it out and try to salvage and collect more premium out of it. So I think, I feel like this is a fair trade to make 4% on a trade and 52% annualized.
Okay, so you definitely.
Did I lose you?
Yeah, you went a little bit fast, but it's okay. I can go over the recording.
I can repeat it. Yeah.
No. I'll go over the recording session and then try to figure that out. I can't think as fast as you guys can. Leon just gave me a headache with that graph chart.
You have a Tylenol bucket in there.
No,
So-
Leon is not executing. He was just TAing it. It was just doing a technical analysis on it to see the strong levels in a technical perspective, right?
Yeah, I
That
understand what he was doing, but the way he was with his speed, I
trying
can
to get
keep
a
up.
sense of validation from him was, will it stretch to 115 fast enough, like by December,
Okay.
right? or will it go down to 91 fast enough, right? That was the whole gist of the conversation, was to see whether we're going to make it to those levels fast enough. So I'm pretty much trading a range, right? All
Yeah.
I'm saying is that if ARK stays between 91 and 115, I'm going to make 4% return on my trade.
This is
Okay.
only strictly no long term, like he was talking earlier,
Yeah,
right?
yeah. The long-term strategy I shared with you is a different story.
Yes, okay, this is just strictly one trade.
Yeah, one trade. But here's the idea, right?
Mhm.
If Eddie wants to go long-term, right?
Mhm.
Okay. He can go long-term on these trades. Okay. He can go long-term, like do the long-term strategy that I kind of shared. The example I shared. He could do
Mhm.
something of that sort,
Mhm.
and then do these short-term ones every month to pay for the long-term one, right? So like if I did the long-term, I would have corrected 125 out of it. So I'm reducing my cost basis by doing that, right? Is that clicking, Eddie? What I'm trying to do, what I'm trying to say here?
I understand what you're saying. And if I had enough knowledge as you do with theta and delta and IV stuff, I would. But problem with me is I'm just learning. And to me, simple as a strategy is own the shares. I was actually thinking about, for example, buying 5,000 shares, right, of ARK, and then just do
Covered call.
sell cover calls.
Okay, so then if you want to go simpler than this, right?
Yes.
Then my suggestion would be that the one that I just said. If you're going to buy the 100 shares, right? I would just buy this one instead.
Okay,
Yeah,
yeah.
that's
So
like buying 100 shares. Eddie,
Yeah.
I'm the same boat you are in. I was doing shares like you are, but now I'm converting into options in
okay,
the last 1 month, I think.
So
And
here's
it's
the
pretty
thing.
good.
Look, let me explain to you, Eddie, right? So
Mm.
you're going to buy how many shares? You said 500 shares?
5,000.
5,000 shares, right?
Yeah.
So 5,000 shares, how much capital will you deploy, right? Let's do the calculator really quick, right?
50,000.
No. 5,000,
500,000. That's about 500,000.
500,000.
Mhm.
500. Okay, hold on.
505,000.
No. So how many shares did you say, Eddie? 5,000 or
Oh, I'm
50,000?
sorry, 5,000. Was it 5,000 or
Yeah,
50,000?
so 5,000 shares times
Yes. Yeah.
105.50. Okay.
Yeah. Yeah.
$527,500 is the capital you're deploying for
Right.
this, right? For
Hmm.
the stock, right? Now, if you did this 85 call instead, okay, let me show you the difference between this number and that one, right? You're deploying 2950 times you're going to do 5,000 shares, which is 50 contracts, right?
Mhm.
So
Hmm.
times 100 times 50. You're only deploying 147,500.
Okay.
1/4. Pretty much 1/4.
Yeah, you're deploying 1/4 of your investment to make 76 cents on the dollar if it goes up and growing, right? It could go up to 80 cents on the dollar, 90 cents on the dollar, right?
Yeah. Yeah. Yeah.
Right. So, and then if it goes down, you're losing 76 cents on the dollar, 75, 74, 73. Like that's what's happening as it's going down. And if you had that 527,500 invested in 5,000 shares, you will lose dollar for dollar. It's not,
Mm.
no, it's no longer 75 cents on the dollar, right?
Right.
Right. Now, obviously I'm doing apples oranges comparison, but what I'm trying to say is if you're going to put $527,000 into it, you might as well do something that is less risky with low capital and then save the capital on the side to help you do the hedging and adjusting.
Okay.
ARK, right? So like you're keeping almost like 300K in a parking lot, right? approximately, right? 300K in a parking lot.
Yeah,
You
yeah.
can use that parking lot money to come in and do the straddle strategy that I was describing earlier to help reduce the investment that you have, which is 147,500.
Yeah. And Mitt, you explained this leverage trading before, and I agree with you. Only thing I was concerned about is if I sell cover calls and if it gets assigned, do I have enough capital on the side to cover
Yeah,
that
that's what I'm saying. You're
assignment?
not using all your 300K
Mm.
at one shot. You're keeping it on the side, right? The maximum you will ever need is the capital that you are willing to invest earlier.
Okay.
Okay, so
147.
you'll have to source that money at that given time. So just be careful. The big mistake people make is they come in and they start using all that money up, right?
Okay. Yeah.
So what you're using that money instead for is hedging, which is alleviating the risk of assignment, right? You're selling a put that's making money. You're selling a call out of the money that's making money. If it breaches, you're not going to get assigned immediately. You may get assigned towards the end of the contract period. And when you get assigned, you're able to close that out immediately
Okay.
and reestablish another one.
Gotcha.
But you won't wait till it reaches that level. Once we're at like 70%, 50 to 70% profit, we're going to close the straddle anyway. Like the 125 that I just told you I'm making on 3,000,
Yeah.
I might just walk away with 100 and leave 25 on the table,
Okay.
right? But I will do that sooner than 28 days if it doesn't go that far, it doesn't extend that far for us.
Okay.
Yeah, it's like pushing your mind to think a little extra, you know. It's like a little bit above simple, right?
Right.
We're taking it up a notch above simple, just buying the shares flat out, right?
Okay.
Any
Okay.
any
And
other thoughts there? Like, what else are you thinking? Speak your mind, buddy. I'm
yeah, I'm
okay.
thinking as long as I'm disciplined enough to not letting these trades go to expiration, I don't want to have cash on the side. I want to have that invested. So
You
what
you
do I
you
do?
have to say, okay, let me clarify again. You have it invested, okay?
Mm-hmm.
So the money you have sitting on the side, you're using it just for ARK. You're just using it for ARK strategies only. If you're going to reuse it for another trade somewhere else, okay,
Yeah.
what you're going to end up doing is kind of shooting yourself in the foot if you don't want to adjust it. Like if it goes down, you want some ability to adjust it and reduce your cost basis as it's going down, right? Um, but you're welcome to just take that money and trade it in something else. But then you're riding this solo. You get what I'm saying? What I mean by solo is you're at the mercy of the direction of ARK.
Mm-hmm.
If ARK goes up, you make money. Doesn't go up, you lose money. You know, you're at the mercy of that. If you take, you don't. If you take the 300K and deploy it somewhere else, that's what you're doing, which you are doing anyway in the stock side. I'm just taking it a notch up, saying that, hey, look, don't leave that mercy on the table when you have another choice on top of it, right? Your other choice is
Diversify.
out
Yeah.
of the 300K
Yeah.
that you have left, you're
Mm-hmm.
going to use some of that money to adjust here. You can use some of it for something else,
Yeah. Yeah.
and you can buy some great products for for home, whatever you want to do, right? Buy
Yeah.
more shares of something. You're welcome to do whatever you want to with your money. The whole idea here is, initially you told me you're willing to buy 5,000 shares, which you're going to deploy all that money anyway,
Yeah.
right? So, and I'm just telling you, look, now it's already deployed. Now just pretend that that money is in a parking lot for you.
Okay.
Or worst case scenario, you can buy more options, with that same money.
Yeah.
Instead
Yeah.
of instead of 147,000, put in 250, you know, get
But
almost,
that's where like recipe for disasters happen.
that is
I'll
true.
say is like now you feel more high convicted on something. I always diversify. Like don't buy the same thing over and over again. Find some other product to do it under, not the same one. But like I'll tell you one thing, Eddie. If you sell puts and calls against your long-term position, eventually your ARK will become free or very cheap. Where if ARK one fine day happened to drop down to maybe like 70 bucks, I'm just making a number up from 90s.
Sure.
You will not feel the pinch that you would be feeling in your shares at all. At all with this call current, because you will still have like 50 cents on the dollar left or 40 cents on the dollar left on your contract, while your shares would have slaughtered you like crazy.
Yeah, actually, I was gonna do a cover call and then buy some puts to hedge it, just in
Okay.
case it goes
Now,
down that deep.
now, so if you're going to buy the puts, let me ask you, what would you just buy then?
Probably would buy like strike price of 90.
90, but what expiry?
Same time as the covered calls expiration date.
Okay, and where would you place your covered call?
1 month out.
1 month out. So we want to do December 18th. Fair enough.
Yeah.
Okay, so where would you cover yourself at? Like at 115? You want to assume this one?
115.
Okay. So I'm collecting here. The reason I'm going through this practical preview with you, Eddie, is if you're selling a call here and you're collecting about 75 cents, okay, and you're telling me now that you're going to buy a put, at 90, right? Okay, so let's go to 90.
Yeah.
Okay. How much is the put costing me? 45 cents, right?
Yeah.
So you out of the 75 cents, you've already paid 45 cents. So only money
So
you're making is how much? 30 cents?
30 cents. Yeah.
You juiced up all your premium that you're making by buying your put, which is not bad. But then what if it doesn't go below 90? Then you're just donating that money away, right? Pretty much.
Right.
So that's why I don't like that strategy.
Yeah. Okay. Yeah.
Yeah, it's like you're selling a call to make more money, but then you're paying it off by buying the put. Now, why is this the case? Because 90 is not too far out. Like, and if you try to buy a put further out in time, like let's say we went to January 2022 and we did a 90 put, look at how much you're paying. A large whopping amount kind of thing. So it's pretty pricey to buy a put kind of thing. So
Okay. Yeah. That was a beginner's theory strategy.
No. That's how we learn, right? You're trying to formulate it, and we're trying to kind of show you how it looks like in the trading platform. If you were to physically do it, this is how it will look like, and this is how you would feel kind of burned a little bit. You're like, okay, why did I even sell a call and buy a put if I'm going to cancel each other out?
Yeah.
Right, to a certain degree, and until you don't see it, you don't believe it.
Yeah.
Fair enough.
So I used ARKK as an example.
Yeah.
Within ARK, I'm a little bit more bullish in ARK Q, R, and G, actually, those three ETFs.
What is this called? QNG?
So ARKQ.
Q.
Yeah, that's autonomous technology and robotics.
Okay. So let's dive into those in another session, strategy session.
Okay.
Until then, let's stay on the line. We'll go ahead and at least end this recording session for folks to at least see that we discussed about ARK in different ways. We went from being extremely bullish to finding good key support and resistance levels. And now we've come up with a trade that we personally have executed in ARK. And if you have any questions, feel free to ping us at ProfitMakers.trade channel on Discord. Thanks, appreciate it, and have a good one.
Okay, the recording stopped, right?